you may be making money, but I see that your company, your organization is so messy. Then the first thing that will come to my mind is, okay, so this guy is messy. He's not well organized. I don't know how he will manage my money. I don't know if his accounting if his books are in line. Maybe he's not on top of his operation. Maybe there are things that he doesn't control, he doesn't master. And yeah, it's just going to be a mess.
Hey, hello, everybody. Welcome back to Africa Tech Talks. My name is Ivo Martins. I'm a tech professional and entrepreneur in the ICT services industry. Today, we have a very special guest with us. His name is Gildas Mouelle, and he's from the private equity firm XSML Capital. XSML Capital is a private equity firm that invests in small and mid-sized businesses across Africa. Today's episode is going to be super fun. So please join me and my co-hosts and Gildas, and let's learn a little bit more about private equity. And don't forget to like this video and subscribe our channel. So thank you so much. Hi, Gildas. Thank you so much for joining us on a new episode for the Africa Tech Talks podcast. It's an honor and a pleasure to have you here with us. And hopefully we'll learn a little bit more about private equity. So my first question to you would be, what initially drew you to working in private equity, and how did you end up focusing on investments in African companies specifically?
Yeah. First of all, thanks to you for inviting me. It's really it's always a pleasure for me to be able to talk about what I do, because I mean it's what I do, and also share my experience, because I think you never know, maybe it can inspire some other people, as some other people experiences inspired me as well. So it's just in the mean of always sharing and help everybody reach their goals. That's why I like actually talking, whenever I can, talk about my experience. So how did I get into this? I would say it's a bit of it's a mix. It's a combination between passion, ambition, and opportunity. The passion and the ambition comes from, it started since my studies. I'm an economics major, so I studied economics, and I've always loved economic analysis, economic and data analysis. And then I also love finance. So back then, when I was doing my bachelor degree in Kinshasa, I was just wondering if there was a field, if there was a specialization or degree that I could do that would help me combining both the best of both worlds, so both of the skills that I love to, and both my passion. And then I ended up realizing that there was actually the field of financial economics, and then which also led to the investment area, because it's all somehow entangled. So that's the passion and the ambition part. That drove me to actually specialize in that field, which enabled me to apply my data analysis and economic skills, all those that I developed to the finance world, to financial analysis, market finance analysis, but also company financial data analysis. And then that also, and at the end, it ended up developing my passion for investment. So when I finished my master, because actually I went to do my master in the United States, that's where I did that specialization. And when I came back to DRC, after 1 year after I came back, I had the opportunity to work for XSML Capital. One friend of mine who was working there just gave me, who told me about the job opening. And obviously I said yes, because that's what I wanted to do. See, that's what I loved. And it was actually doing investments in DRC. So it was for XSML Capital is a fund manager that is operational in mostly in Central and Eastern Africa. Been operational for 10 years now. So when when I had that job offer for XSML, I jumped on it, and that's how I end up working specifically on investment in African companies.
Well, great. It's been a journey, right? So you started in DRC, you did your master's in the States, right?
Yes.
You came back and you started already. You had already had the passion for the investment world, and luckily you had the opportunity to start working in the investment world right away.
Exactly.
And I would say everyone would argue that each country or each region has a unique, I would say, unique way of doing business. So it's very different from country to country, right? In your opinion, what do you think are the biggest misconceptions people have about investing in Africa, in Angola? Right now, you have a little bit more experience in the Angolan market, right? For some months now, or a year almost. And those misconceptions, those biggest misconceptions, how do you address those misconceptions with potential investors?
Well, first of all, and I think that's one part where we are lucky at XSML, is that our investors are development finance institution, and their job is to actually invest in African markets, and to be much wider, I would say in frontier markets. It is their job, so they're used to the risk. They're used to the risk level too, so their risk appetite is actually already high enough to go to those markets. So we don't really have those issues with them, because that's actually the mandate they gave us, to go to those markets and help the private sector to develop. You see. However, still to answer your question, I think one of the big misconception about the African market that people can have, that global investors can have, is that I would say that nothing is happening, because there is the only thing is, every time when people talk about Africa on the news, on international news networks, it's always about it's always bad news. So it's always about war. It's either looting or corrupted elections or whatever. Just, I mean, more recently, just what's going on with in Sudan. And then for institutional investors who are used to more plain vanilla market like Europe, Asia, or North America, when you tell them about, I mean, basically telling those people about Latin America is already foreign to them somehow. So if you tell them about Africa, it would just be, oh, what am I going to do then? There's nothing happening. But it's not true. It's not true, because once you get over that misconception, you will come down on the field and you will see that there are actually things happening. You know, it's actually better than it looks, or than it sounds, or than how the African continent is being unwillingly being sold to the rest of the world. So I would say that's the biggest conception. There's nothing happening, there's nothing there. But it's all about market segmentation and what you effectively want to do and how you want to do it.
Okay, so you would say that there's a lot to do, there's a lot of work to do in terms of communicating what's happening here in the continent or in some regions in the continent, because things are happening.
Yes.
And that might be one of the biggest misconceptions, is that everything is bad, because we keep, the global media, when they portray Africa or some African countries, is almost always in a bad sense, right?
In a bad sense.
War
Exactly.
this, famine this, corruption that,
That
and
there's no
that
purchase
keeps away.
power and everything.
Yeah.
Yeah, I mean, yeah, of course, the purchase power is lower compared to European standards, but it doesn't mean that in Africa, generally speaking, and if you take some countries, it doesn't mean that there is not a middle class or a growing middle class that does not have purchase power comparable to OECD countries. There is.
Yeah. No, and in terms of population growth, I mean, Africa will see an increase, a steep decrease, right, in next years. Just I don't know, some days ago, we were presented with the long-term strategy for 250 for Angola, right? So the government has this strategic high-level document, and they shared some data. Of course, the data is not exclusive to this document. Is something that has been shared by the United Nations for some years, which is the perspective of population growth. And just for instance, just in Angola in 2050, we expect to get more than 70 million inhabitants, people, right, living in the country. And right now we have 33 or 35 million people living in the country. So it will double in, I don't know, in 25, 27 years, it will double in population size. So in terms of markets, I understand that is a game changer, I think. So, and tell me, we talked about one of the biggest misconceptions is this. So access to data or accurate data about the markets, I would say. But what in terms of, generally speaking, what kind of factors or key factors do you look when you evaluate potential investments in the companies that your company or you invest in? And if those factors are totally different or shared or a little bit different, I don't know, when evaluating investments in African companies, okay? So would you say that is the same principles, basic principles apply if it is an Asian company or a South American company or North American company, or is it different, fundamentally different, or they have a shared I don't know, set of factors, and some other factors are totally different?
I would say the key criteria are the same, because at the end of the day, profitability is profitability. Performance is performance. Growth is growth. What may be different is maybe the approach on how to communicate with the promoters or how to convince them or to agree on to work. I mean, to develop together a work plan, because everything at the end of the day, everything has to be related to the cultural environment where you are. But generally speaking, I mean, first of all, the key factor that we look at before even the company's profitability and historical performance, first of all, is the promoter himself. So we invest in small and medium companies. So big corporates, we don't have the mandate to invest in big corporates. The mandate that we receive from our investors is to help SMEs, provide SMEs with a stable source of financing, medium and long-term financing, so that they can actually grow their operation, whether it's for CapEx or permanent working capital solutions.
So sorry to interrupt, Gildas.
Yes.
An SME for you in terms of annual revenue or headcount, what are we talking about?
I would say, we have few criteria, but the key criteria, I would say, in terms of headcount would be a maximum of 250 people. And
Okay.
annual revenues somewhere between let me check 1 second. I would say somewhere between 10 and 16 million dollars of
Revenue,
revenue.
not
Yeah,
profits.
15,
Revenue.
no, revenue, 15 and 7, yes, between $17 million revenue, basically. Revenue, not profits. Revenue.
Yes.
That would be an
Okay.
SME for us. These are according more or less according to the International Financial Corporation Standards, which is one of our
Yes. Okay.
investors. Yeah.
Okay.
So that's an SME for us. And at the end of the day, the mentality for what we have realized, and I think that that's something that is worldwide. It's not just specific to Africa. SME mentality is always a bit patrimonial. So it's most of the time a family business. Also, you have one promoter who started it all and who's driving things. So everything starts with the promoter's personality. Who is the guy? Does he have the capacity to grow the business? Does he have does he have management skills? Is he a team builder? So can he create a business, make it grow, make it flourish, and successful? So and for that you start by looking at the track record. What has he done? What has he achieved in the past? That's the key criteria. And that criteria itself is the trigger to all the rest. Profitability, strategy, management style, staff well-being, because that's really important to us. These social aspects, those ESG aspects is really important to us, because if your staff is not happy working with you, you will never get the best of them. So we think that the best way for a promoter to thrive, for a company to thrive, is to make their staff happy and aligned with the company's goals. If you don't do that, doesn't matter whatever you do, you don't have a long-term perspective. So these are the key criteria. These are more or less the key criteria we have, and we look at.
Yeah, right, Gildas. And based on that, how do you work in practical terms with portfolio companies once you decide to invest in? And given some of the challenges that happen with running business in Africa?
Of course. And I think our mentality is working as partners, whether we take an equity stake in the company or not, or we do just a simple loan. Basically, we always work like partners. So we try to stay close to, we establish a relationship with our clients, so that the relationship based on trust, because providing capital is one thing, but at the end of the day, what really matters is, can we trust each other? See, so that's what we do. So once we've done that, yes, of course, we invest, we provide capital in the company, but we also help the company developing the other aspects of its operations. So whether it's by adding value, by building capacity. So during our investment process, we try to make an overall assessment of the internal control process, or all the operation chain, value chain, and see what is lacking, what is missing, what can we bring on top of the financing, whether it's helping recruiting consultants or providing an additional training, or developing a new marketing or communication strategy, so that in the end, we make sure that the business is growing. Because at the end of the day, we're not providing capital for the promoters, for our partners to work for us. No, we don't want them to just work to repay interest. No, we want the company to grow, so that they can easily repay interest, that's true, but also so that we can have an impact on the company and on people's lives, on the workers' lives, so that the company grows, workers also see their well-being improving, the whole community benefits from it. So these are the key things we look at: the promoter, and then from there, staying close to them to help them building a sustainable ecosystem. If I can, maybe ecosystem is it's a bit too big, but a sustainable operation.
Right. Can you give or share with us an example of a successful investment in an Angolan company or a company in one of the countries where you operate? And what reasons did contribute to that success?
So success stories in Angola, not yet, because it's too soon. We made one investment already, so that's what, yes, we can say successful investment. But I really consider a successful investment an investment successful after the time when we have seen the impact on it. So I would say a successful investment operation, because we have disbursed, yes, it's in the distribution sector. It's a relatively small supermarket chain compared to all the big guys we have here. What we saw, why did we choose it? The management style, the distribution network, and of course the promoter. First, the promoter, it's someone we already knew. We have worked with him in the past. And he also had operations here in Angola. So he needed additional financing to strengthen his operations here as well. And we said, why not? Because the strategy he is operating here, the growth strategy he's operating here, is the same he operated in another market where we are. We've seen the potential. We've seen how he's able to manage his margin. And given that at the end of the day, the Angolan and Congolese markets are very similar, because yes, the plant is based in DR Congo. Because at the end of the day, they're fairly similar. Yes, we just say, okay, why not? And this is also actually one part of our philosophy and mindset. We grow with our partners. Once we have made a successful investment with someone, we don't mind adding more money and keep working with them to help them grow their businesses.
Gildas, I have some questions to you. Based on what you said and what we has been understanding, I would like to know, in your opinion, what role do you see the private equity playing in Africa development, and how do you balance that with the financial returns that you're looking for to generate for your investors?
Well, I would say this: when you look over history, you see, the banking sector is heavily regulated, so there are a certain level of risk they will never take. Across history, and actually even till now, private equity is booming across the world, and it's also the case in Africa. Actually, in 2022, while private equity investment have been decreasing in pretty much all the rest of the world, at least in North America, Europe, and Asia, it increased in Africa by 3% in terms of value in 2022. That shows that there is a growing interest for Africa, and I am sure that it will contribute to the development of the African continent the same way it developed massively the other countries like the United States and European countries, because they are pretty massive over there. yeah, I think there is a future for Africa in private equity, although for now it's still concentrated in just few markets, because I mean right now I think it's mostly Nigeria, so West Africa and mostly Nigeria who got the lion's share of investment in Africa in 2022. But as investors are still looking for new and higher returns, actually, because you were talking, to come back to the return factor. Private equity provides returns, high level of returns for investors, unlike more or less unlike traditional loans and everything. But it's mostly also because, generally speaking, because the risk perception on the African continent is higher than in other markets, then interest rates and returns are higher. And that itself is enough, if not to attract all the investors, at least spark some curiosity. And I think in the future, because right now it's mostly DFIs that are investing in Africa. So even if there has been an increase in funds coming to Africa, it's still mostly DFIs. But I think that as more private investors see the success of investment, of private equity investment on the African continent, but also as African countries, African governments do their best to improve the doing business in our countries, because at the end of the day, that is also a key factor. If doing business conditions increase, we will really see more and more private equity investors coming, and hopefully they're going to be more diversified as the overall doing business improve on the continent.
Yeah. And thanks to that. And I have another question for you. And based on what you said, how do you assess and manage the risk when investing in African companies, taking into consideration our political condition and some instability that we live in the continent? It's quite difficult, right?
True, it is quite difficult. But okay, so of course we take collateral. We have a preference for real estate collateral, but we can also take pledges on equipment and classic things. But I always say that at the end of the day, I will always take all this, but the best security that I have, that a company can give me, is its cash flow. Because at the end of the day, it's not collateral that will repay the loan, it's the cash flow. So that's why we emphasize on the cash flow analysis. If we look at past cash flow analysis, so historical cash flow, but also future cash flow, and do the financials that we receive make sense with what we see on the ground with the operations? Because that's something you can feel. You can see financials, but when you go on the ground, there's a mismatch, then there is already something. But on top of that, I would like to say this. So yes, we take yes, there is political risk in Africa, but let's face it. I mean, African countries, we've been
political and economic.
Decades. Yeah, exactly. We've been in a recession for decades.
Yeah.
But there are still people doing business and making money here.
Yeah, and we are now facing a currency crisis in Angola now, and it seems very difficult if we put in the shoes of the private equity companies and other companies that are investing in our countries, and to see the valuation like that.
I agree. It's also, but look, it is. I think there is risk, and it's like a coin. There's two sides. It's risk and opportunity.
Yeah.
Now you decide on which part you want to focus. You want to focus on the risk, or you want to focus on the opportunity, because there is always opportunities in those times. Yes, the currency is depreciating, but at the end of the day, it also means that importers need more funds. They need US dollars to keep or to maintain the importing capacity. See, so at the end of the day, it's just about managing the risk, betting on the right horse. That's why I say the client selection and the promoter is the key. You have to see how that person manages his margins, his or her margin. See?
Yeah, and
that's it.
Yeah, and just one thing to add is that I think it's, in my opinion, of course, it seems difficult and seems also a way to opportunity is not just about the opportunity in terms of doing business, but the opportunity to keep the profit and to reinvest in our countries. I think, in my opinion, it's one of the best issues that we have to guarantee, because what we see, it puts a bigger pressure for the banks, for the needs for hard currency, because at the end of the day, we can see, of course, the opportunity to make money, but you don't see until now, in my opinion, of course, the opportunity to remind the profits and sometimes to reinvest part of this profit locally. It's tough.
It's tough, but first of all, I would say that is longer term. I mean, because even if you keep the profits, that you reinvest them here, look, let's say you have enough profit to build a factory. It's going to take you 1 or 2 years before the factory is effectively operational. And then you'll be on the learning curve. And then let's say it's going to take you for like 5 years before you can actually make a profit and see the impact of that factory. So in the meantime, you're still going to need financing, external financing.
Yeah.
At least that's what I would tell a promoter if I was trying to convince him to take my money.
Okay. Yeah.
But yes, there is. It's also to that with that aspect. I agree with you. It's still an opportunity to start, at least try producing more locally, because at the end of the day, one of the reasons why, it's supply and demand. There is more kwanza on the market than US dollars, and puts a lot of pressure on the currency. While if there was more, if the government could develop more means to not only have more US dollars or maybe more gold or more raw material reserves, keep it locally, that could help. I mean, at the end of the day, we need to see the long-term economic plan of the government and how they will reverse the situation. That's what matters at the end. I think it's a bit too soon to start speculating. Let's see how it goes.
Thank you. Sorry.
Gildas, hi. Well, thank you. I'm trying to understand a little bit of how the African countries position themselves in terms of investment, and to understand that, and your explanation has been pretty good, but to understand that, and from my perspective, I'm in Africa for 15 years. So I've been trying my best also to be an entrepreneur and to bring also to something to the table, because in the end, knowledge is the base, and then from then you're going to try to do something, and it's a try and error. And look, I'm on the side of entrepreneur. I have my own companies, I have my own stuff, but one of the questions that you go to the bank, you go to private equities, and you're trying to get financing for good ideas. And when I'm not talking about me. I talk with a lot of people that has the same issue. And what happens is we face walls. most of the times we face walls. And my question is, what do you think what advice would you give me and the other people like me that wants to start businesses in Africa, in Angola, and the neighboring countries? And how can we attract investment, more investment here with this kind of entrepreneurship? And how can we position ourselves better so that in the end, more VCs look at us?
I would say this. Actually, this is something that I think that it's a mindset that I have always had since when I was a student. You wanna simple. You want to be among the best. Compare yourself to the best. See what the best do and work as they do. Many entrepreneurs entrepreneurs always like to say, yeah, the banks, the financiers, they're not good, they're not doing anything, they're not giving us money. But at the end of the day, the question is, what did you do to make yourself attractive? See, exactly the question you're asking me. And I would say this, it's quote unquote simple. Work according to international standards, international management best practices. Because me as an investor, if I come to your company and I see that your processes are there, and it's just not processes on paper, but you effectively putting the work implementing it, and we see the quality output that you have. And just to give you one example, one thing that I look when I go visit operations is, first of all, what's the office look like or the factory look like? Is it organized? Is it sharp? Is it nice and neat? See, that already tells you a lot about the level of details and attention the promoter has on his operations and what he wants to do, what he wants to achieve, what he wants his company to look like. See,
so it's almost, Gildas is sorry to interrupt, but it's almost like when we go to, I don't know, a restaurant, so to speak. Exactly. And normally people say, go to the bathroom and see how is the bathroom, right?
Yeah.
If the bathroom is pristine, the cuisine and everything else must be, according to that, but because it's in the details, right? So what are you saying to me is more or less like that. So
exactly. That's where we start. Because look, I can come and I see, okay, you may be making money, but I see that your company organization is so messy. Then the first thing that will come to my mind is, okay, so this guy is messy. He's not well organized. I don't know how he will manage my money. I don't know if his accounting if his books are in line. Maybe he's not on top of his operation. Maybe there are things that he doesn't control, he doesn't master. And it's just going to be a mess. And it's funny, but I wouldn't be surprised. This is something I'm now trying to observe, and only statistics will prove me right or wrong in the future. But the level of details or the level of sharpness a company operation could at the end could be an indicator of the success or the failure of the company. So that's one. So of course that's on the appearance now, and then there is the rest. Have your books in line, be in line with the administration. Be in good relationship with the tax authorities and blah, blah, as much as you can. Not as much as you can. Be administration. Yeah, administration is always something. When they want to hunt you down
on your side.
Yeah, exactly. When people want to hunt you down, they will start looking at your administration. So if your administration is a mess, you're gonna have issues. See, so that's something I've noticed. Sometimes promoters, they want to grow so fast that they forget, they just focusing on growing the revenues. But they forget that, yeah, you can grow your revenues, but then your internal organization has to become sophisticated as well to be able to manage that growth. It's the same for babies. I mean, babies start crawling and then walking, but before that, before they can even be able to sit or crawl, their muscles are strengthening. I would say it's the same process.
I get it. It's like do your own bed when you leave the room. It's
exactly
this kind of comparison.
Do your own bed. Exactly.
Do your own bed.
Exactly.
Gildas, I can't but to connect what we are talking about with technology, because most of organizations these days, and I think all of us here are connected with technology. Ivo is the digital transformation guy. I'm on the processes side. Victor, and even Manuel, we're processes, finance. So this all connects with the goal of this talk, which is mostly digital, and how we need to implement digital transformation in companies so that all those items you were referring to can be introduced in organizations and through the digital lenses, right? Because if you have access to good software, if you have the organization of the books with the good document workflow, then you have a good company, and it's attractive for investors.
It's attractive, yeah.
Unluckily, from my perspective, and it's my own perspective only, it's very difficult still in some countries to pass this message that organization is important. So your voice and what you're saying is very important for us also to promote and to disseminate this kind of practices. Mm-hmm. I can't but also go on another digital approach, which is what do you think that are some of the biggest trends and opportunities in the investment in Angola and also the other markets around and in Africa? Because from what we've talked, you consider that most sub-Saharan African countries have or share the same kind of approach in terms of market. So what do you think that are the biggest opportunities, the biggest trends, and also how are you and the XSML positioning yourselves as in this trends to take advantage of them?
Yeah, I would say this. Right now, especially in Africa, we everybody. And worldwide, there is actually a trend regarding fintech and IT investment and everything. Yeah, and because they want to leapfrog, we think that we can leapfrog some things thanks to technology. I agree, but on the other hand, there are certain things that you cannot leapfrog. You cannot leapfrog the absence of roads. You cannot leapfrog the food security. Basic needs, you cannot leapfrog them. Technology can help improving the supply of basic needs, but a phone will not feed me or my kids, you see, I mean, by itself, per se. So that's one trend, but I think at the same time, yes, we should not stay backward compared to technology trend. But I think that the biggest challenge that we have in African countries and in Angola also in particular, since we're talking about Angola, is that we still need to address our basic needs. We still have an infrastructure, a huge deficit in infrastructure. We have raw material that we need to evacuate if we want to export them, or we need to build more infrastructure so that we can effectively transform them. So we have a deficit in energy, we have a deficit in roads, we have a deficit in Food supply somehow, but that some can argue that it's mostly related to the lack of infrastructures, because we cannot distribute production to consumption center properly on time. So, and that's the reason why us at XSML, I will not say that we don't do fintech or IT. No, because we have invested in just one IT company in DRC, but that's the only investment that we found attractive. It was a call center. But we're also looking at other IT companies, which are sizable, because we think, okay, it's interesting. So we are open to do that. But me personally, I am still giving a priority to the other sectors that can effectively address or improve directly or indirectly the population well-being. So if it's in transformation, for example, if tomorrow I see a promoter who has a factory, or he already has a company, wants to build a factory to start producing locally, transforming locally, that I think has a better impact to me personally. That's my personal opinion. Me as an analyst, as an individual, that has a bigger impact than fintech. Fintech is good because yes, it enable, for example, it makes payments easier, and that is also part of the overall economic system. But before thinking about payments, you must have something that you can sell or buy first. See? And that's why I think that is a key. IT, internet, fintech, that is really good. But let's not forget the basics, because at the end of the day, when you look at all the big superpowers today, originally they were big agri superpowers. It started from there. And I think we cannot leapfrog that. We should, let's not try to reinvent the wheel.
I would like just to share, yesterday I was reading an article about strategy and analyzing competitors, the benchmark. And the guy said one thing very interesting. The company sometimes spend a lot of times trying to understand what the competitors are doing instead of what they are seeing. I think is one of the things that explain what we see in the fintech ecosystem in Angola, because a lot of companies, instead to try to understand the opportunity, to see what the other are seeing and decide if makes sense or not to go that road, they spend more time understanding what the others are doing and try to copy them. Is regarding what you said, of course, I also believe in the fintechs and in the process payments, but this is part of something, and you have to buy on to pay something. Exactly. And you must to build this thing that can be paid or purchased by the other side.
Exactly.
Yeah, that's the point. I'm totally agree with you.
Let's not forget that. You have something?
I just have something to say. Sorry, because I remember reading this article back 2008, 2009, and it was about two different models of development, and they were analyzing China and India. So China went all full road. They went infrastructure, factory, and all built on supporting the hard structure. And India went really differently. So they built subsea cables so that they could pass internet. And you have a lot of Mumbai, Bangalore, all those cities were built based on hardcore internet infrastructure. Of course, they had the language. So while the US was sleeping, the Indian market. They were working, so they were analyzing the doctors were analyzing the diagnosis, the analysis, everything. So that was a process that worked for them very well. I think that Africa needs to position themselves as well, and they need to think how to cooperate in this, so that we can have, like, I believe that there's a middle ground here. We can all just be producing and be on the hard infrastructure. And actually, and just one more thing, because I think that Brazil now is, for me, the best example of an economy that is agro-industry driven, and also they were built on this very seamless digital infrastructure that is changing the landscape. And I think it's a mix. I think we have to balance.
Yes, it's a mix. Don't get me wrong. I am not saying that we should pick one or the other. No. And just today, IT is at least some IT activities are part of the infrastructure investment category, because data center is considered as infrastructure. Cable is considered as infrastructure. So to show that, yes, it has become a backbone of our economic system. So we cannot neglect it. What I'm saying, my position is more that, yes, we cannot neglect it, but let's not forget the basics as well.
Yeah, the first principles, right?
Basics. Yeah, exactly.
Because I mean, those countries, China, India, one thing they have been investing heavily is education. You cannot leapfrog that. You have millions of engineers in China or in India or something like that. You also have infrastructure. Name it roads, name it ICT investments. Some things you really have to set it's like a pizza. You can you can choose your topping, right? But you need the base of the pizza, right? A pizza to be a pizza needs a common base and tomato sauce and something like that. But the rest, you can choose to put pineapple. It's controversial. You can put pineapple on the pizza, of course. I mean, you can choose your flavor, but I think the basic things you must have them. Otherwise, you really cannot leapfrog some things. You cannot put money on the table with just a mobile phone. You need people working in an industry. You need disposable income, and then of course you can have all the fintechs or other types of companies to ease and facilitate all those payments and transactions. But first, you need to take people out of poverty, right? Exactly. China did that. India is continuing to do that. Then education. Then you have to choose if you're gonna bet on, put people on the moon or invest in AI or, traditional services, agriculture, or something like that. But you need to put people first in the equation. I really think that's the main thing that we get from here. So, Gildas, we're running and we're approaching the end. Until now, I still have a question for you, of course, but just to sum up a little bit, you shared with us very kindly your trajectory. We are also addressed the biggest misconceptions in investing in African companies, right? You also shared a success story, right? You already did a first, I would say, too soon, but you already did an investment in a company in Angola, like a small supermarket chain, and that's a good example of when you follow the companies you invest in, because it was a previous investment of yours in DRC, I think, right?
Yes.
So you follow them here, and I mean, those investors have a track record, so it's easier for you guys to invest in them because they're already proven themselves. Another thing that I recorded in my mind is, when trying to be successful in a company, the wheel is already invented, right? So work according to international standards, procedures. That's a very predictable success indicator, right? So there are contextual things, but a good company has very strong processes and people, and you cannot circumvent that, right?
No, you
have to bet on that. And as we were addressing, some things you really cannot leapfrog, of course. You have to have the basic infrastructure in place, be it roads, be it, I don't know, means of transportation, public transportation. We talked about food security. So very, very interesting talk. But I have a final question for you. So, so how do you balance? How do you balance your responsibilities? You touch a little bit about ESG.
Yes.
Which I think stands for
environment,
social, and governance.
Yes.
Yeah. So, and your main funds, your main source of funds come from DFIs, right?
Yes.
So how do you balance your responsibilities to your investors and with your desire to make a positive impact in the communities where you invest, of course? At the end of the day, you must make profits, right? Your investors demand it. But nowadays, they want profits, but they want you to be socially responsible, environmentally responsible, to have good practices in place. So how do you balance this? How is it possible? Is it possible to be a profitable company and still be environmentally and socially responsible?
I would say yes. Of course, it's easier at an SME level. If you talk about oil company, it's a bit still a bit complicated. It still requires a lot of R&D. But at SME level, with a simple production processes, it's much better. It's still easier. How do we balance it? We actually don't even balance it. It's part of our investment strategy. It's part of our due diligence process. And you know, it starts from very small and simple things. For example, it would be your waste management. How do you? These are the simple questions we ask companies. How do you manage your waste? Are the people? Is the company collecting your waste? Is it an official company? Are they recognized? Or is it an NGO? Do they have the paperwork? Are you sure you're not going to have issues working with them when you make payments? I mean, do they have all their paperwork nice and neat? So it's all these aspects. Now, how does it impact the company we work with or the overall community? And that's actually one, I wouldn't say fight, but discussion we always have with promoters, because when you come to them and talk to them about ESG, the first thing they're going to tell you is, you're coming to me, telling me this, but look where we live. Look at our environment. You think we care about ESG? I mean, let's focus on making money first. But then, yeah, that's being a caricature. They're not all like that. But we have had some tough discussion. But what we need to realize or to understand is it benefits everybody in the long term. Following processes, making our environment and communities conditions of living better at the end of the day is profitable for the company in the long term. Because, for example, let's say you have a company that produces, you have a plant. You know, you are a production plant, but your production management, your production system is flawed, and the level of waste you produce is so high and toxic that it kills the environment, or you pollute the water while you need that water in your production process. How is this sustainable for you then? You see, but if we come to the company, we analyze their system, because we follow the what is called the IFC performance standards. So IFC developed performance standards that enable the company to actually assess their compliance with some level of ESG sustainability. And we have incorporated those performance standards in our due diligence process. The goal is to analyze how the company compared to those gaps in the industry, because there are criteria per industry. So we see, okay, that for your industry, you should, best practices are like this, like that, like this, like that. How do you compare to that? Then we do gap analysis. We see, okay, you're already doing this. That's good. You're not doing this. Let's work on it together. Let's develop an action plan so that you can comply with IFC standards. And it works. And actually, to give you one, that's another success story. We have two clients, actually, both from DRC, who were able to win one was a contract with a multinational who was coming in DRC, and also become member of the preferred United Nations system suppliers in the Democratic Republic of Congo. But that was thanks to all the work we did together to help the company comply with those performance standards. So at the end, complying with those performance standards helped the company attracting more business. See, and for another client, because they had all those processes in their system, thanks to the work we did together, that company was able to win contract in Eastern Europe. See, I mean, yeah, the sister company that was actually based in Europe already, but it started in DRC, and thanks to the work we did together in DRC, we applied the same processes over there, and it was able to grow its businesses. So, like I said, we just don't balance it. We help the company complying with those standards, because whether we like it or not, this is the future, this is the key, this is the trend. Everybody's going toward it. Don't try to swim against the stream. See? Basically, right. So we just help the company following the stream. That's it.
Great. Gildas, thank you so much. Thank you so much for your time. Thank you so much for sharing these insights. They are so valuable. I hope we can have you here another time, 2, 3, 4 more times. I really hope that XSML Capital is turning almost 12 months working in Angola. I hope those 12 months turn into 12 years more of operating here. And
that's the plan.
We really hope, I hope also that you continue investing in local companies as SMEs right here, bring them to another level, help them, go to other markets. And I really think this is the way to go. And also profits, but also sustainability and responsibility, and don't run away from ESGs, right? So it's
exactly
that on the long term, you cannot run away from them.
No.
So thank you so much once again. Thank you guys, and we'll see you next time.
See you next time. It was a pleasure.
Yeah, see you next time. Bye.
Thank you.
Thank you.
Cheers.
Thank you.
Bye.